Welcome back. So, slight caution if you're looking at markets across Asia, and the SGX has been indicating pretty much the same. In fact, last time I checked, we were looking at about a 60-point drop, and that's still the picture, 70-point drop as we speak right now. But let's put the spotlight on a big development that impacts Coal India, and favorably in this case, because finally, after many, many years, there is a price increase that we're seeing, not on all grades of coal, but on some of the premium coal grades for sure. And the effective increase is about 8%. Ashish Kejriwal, Director Research, Metals and Mining at Nuvama, is joining in to help us sort of decipher the numbers. Ashish, morning. Good to have you on the show. Now, I've been going through a lot of the notes that came in from last night, and it seems that this at least partially offsets the higher wage impact that Coal India was reeling under. To what extent does it help? Some of the estimates say up to 50%. Coal India will get 2,700 crores because of this price increase. By how much do your estimates on the stock go up, if at all?
Yeah, hi, thanks. Good morning, and thanks for inviting me to the show. See, as you rightly pointed out that, Coal India has increased prices after 5 years, actually. And when you look at the numbers, their employee cost, because of their earlier negotiations with labor unions when they increased prices by around 19%, the employee cost, overall cost impact on P&L should be something like 5,500 to 6,000 crore per year. Whereas when they have increased these prices, selective price increase in FSA, that will help them in 2,700 crore for rest of the year, which means around 3,200 crore at least for the year. I'm talking about on an annual basis. And one has to keep in mind that, going forward also, you have to increase volumes, and this price increase will be related to that also. So 3,200 crore per year is on account of right now, that is in FY24 volumes. But in FY25, when volumes again increase by 5%, this can increase to around 3,800 crore also. Besides that, and this will justify, you can say, around 60% of their wages, which can be rectified on that. So in one shot, they have taken 60% impact, nullified in that. And second thing is, what they are doing is that they are increasing the volumes also, which will offset the impact of higher employee cost. So overall, after this structure, we have increased our FY24 EBITDA by around 7%. While keeping FY25 flat, because we have earlier taken into account that price increase will happen only after general election year next year. So I think I will treat it as a positive development only.
Sure, got that. So it's a positive development, and you've increased the FY24 EBITDA by 7%. What about the price target? Because, the stock in the last 1 year, if you look at it, it's up about 25%. It's gone from 200 almost to 250 now. Is there further upside in the stock? If yes, how much? And apart from EBITDA, on the EPS as well, have you raised your targets?
Okay. So our target price is 365, which obviously gives around 50% upside from the current level also. So you have, and in terms of EPS upgrades, it's around 3.5 rupees, which is around 8% increase in EPS also for FY24. See, the stock has outperformed in last 1 year. One has to keep in mind that within the metals and mining space, this is the only company where we have seen earnings upgrade. And even if global coal prices falls, FSA prices are still at more than 70% discount to landed cost of import. So, in FSA, it's mainly because of inflation in India, because of which they were unable to increase prices for power sector. Else, FSA price can increase further from here, which we think it can happen post general election next year. So our performance was mainly because of increasing earnings estimates, as well as no risk of fall in earning estimates from the current level also. So I think outperformance should continue. In a day or two, I can't say anything, but yes, that opens the door for 300 plus for the stock. Because right now, if you look at on the valuation, trading at 2.5 times EV/EBITDA, 5 times PE, 8% dividend yield, 20 rupees dividend easily they can give for foreseeable future. So in this scenario, when I'm seeing that downside risk is limited in the stock, in the sense in EBITDA, and valuations are very supportive. It's local India focused. So global whatever scenario is there, that is not going to impact their numbers. So I think this is one of the best stocks which we like in the metals and mining space.
Okay, well explained, Ashish. Stay with us, Devin.